Zehan, I'm happy to welcome you on stage for the venture building last session. And then
we still have Google.
Oh, we still have Google. I'm sorry.
Yeah, don't worry.
Okay,
quite good. All right, thank you. All right, good evening, everyone. Now we are tasked now for the, they call it the graveyard shift, and also hopefully we can do some energizing and get everybody back. So let me welcome up to stage with me, Harald from SC Ventures. Harald, would you mind joining me? And then we have Kristian from Vesuvio Labs, Shyam from BCG Digital Ventures. Come. No protocol. So perhaps just go around the room, starting from the far right, Kristian. A quick introduction, and this is something that you do a lot, to the startups that you build, right? Give us your elevator pitch.
Well, yeah, I've been doing it a lot this week, certainly. My name is Kristian. I'm the founder of a company called Vesuvio Labs. We are a venture studio, primarily looking at fintech, and about half of what we do is InsurTech. So we have worked with a lot of startups, covering many aspects of insurance. Our job is to try to make it easier for a founder with a great idea to execute technically, build a platform, get it live, grow it. So that's what we do.
Thank you. And Shyam.
Cool. First of all, thanks for having us here. I guess the benefit of being in the graveyard shift is you can reflect on the day, and so it's been a great day. Thanks all for having the energy to stay with us. So yeah, my name is Shyam. I'm a director at BCG Digital Ventures. Digital Ventures is the corporate venture building arm of the Boston Consulting Group. And what we do is we partner with corporates to innovate, build, launch, and scale new digital ventures. We've been active for about 8 years. We've launched nearly 200 ventures in the market, including in insurance, but we do multiple sectors. We go across industries and across sectors. We have a global presence, but more recently we've doubled down on our presence in the region by establishing a permanent center in the region. So quite optimistic about the prospects of venture building in MENA.
Thank you. Harald?
Well, thanks for having me. So I'm Harald. I work for Standard Chartered Ventures. So we're the venture arm of Standard Chartered Bank. We were created about 4 years ago, and we have 3 activities. So a little bit I would say in doubling with a previous panel. We have a VC activity where we invest in mostly Series B. We just set up a Series A and seed fund as well. And I was interested in what Ahmed was saying because we're also setting up a debt fund. And we have a venture building activity, which is looking at entrepreneur ideas and growing these ideas from simply, like a very early stage all the way to creating them externally for the bank so that they can provide optionality for the bank.
Great, and thanks for the introduction. And I'm Zehan from QIC DVP. And I'm just anchoring on Lars's presentation this morning, right? He said for a thriving ecosystem, there were 5 challenges, and then amongst them, Othman checked off the impact smart money kind of box, right? And we're here, talking about corporates, and then how do corporates, harness innovation, and how do we work with startups, right, to create that thriving ecosystem. So Harald, in your experience, how does a company like SC Ventures work in that kind of space?
Yeah, so the way we look at innovation is, so we're innovating for the bank itself. So we have set up an entire activity with coaches and human-centered design specialists that will help the business innovate and better serve, always thinking of, customers first. So pure innovation for the bank. Other part of innovation is identifying early stage companies that can have an impact on the bank's business, on our clients, and investing in the right ones. So really a VC activity. The last part is on the venture building side. So it's really investing on the ideas of the future and creating new and disruptive business models for the bank. Just to give you a data point, we have set financial targets for ourselves. Within the next 3 to 5 years, we've committed to our board, to our shareholders, that about 50% of the bank's revenue will be coming from SC Ventures.
Wow, that's a big commitment, Kristian. It's a good opportunity, to be speaking to SC Ventures pretty soon.
Absolutely.
And
we will.
And yes, you will. And from your perspective, I think Harald came from an entrepreneur and then spurring innovation and probably spinning out or spinning back in. But Kristian, from your point of view, right? The corporates working with startups, right? And you mentioned entrepreneurs early on. So were you referring more to entrepreneurs that are within a corporate setting, or entrepreneurs that you hunt from the wild and you bring them into a corporate setting when you're doing corporate venture building?
Yeah, so there's always this conversation about whether it's entrepreneurs first or the other way around, the studios or the corporates kind of coming up with a problem to solve and then finding the right people to solve that problem. In our case, we were part of a similar journey in the UK. So we sat in these kinds of meetings 4 or 5 years ago, little kind of bars and coffee shops, and talked about dreams for making insurance better. And one of the key problems that we then discovered as we all got going with our businesses was it's very difficult to innovate in insurance without partners, because you need to work together. It's very, very difficult to cover the whole stack. So almost all of the insurance startups ended up in some way partnering with corporates. So it has become a very important part of it. Here, even more so, I would say, you need a good partner that is willing to support you. So I think we started out entrepreneurs first. We worked in that way and we helped in that way. I think gradually we are moving towards a scenario where we are perhaps a little bit more collaborative about the use cases that we want to solve with corporates, entrepreneurs, and other parties in that ecosystem.
And great. And Shyam, given your experience, as a big consulting firm, right? I guess you have lots of conversations with corporates and getting into their thinking and their minds, right? What were corporates thinking? When they say they want to do corporate innovation or even digital transformation, as you've mentioned right previously.
Yeah, I think corporates that we talk to come at it from different standpoints. Some of them come at it from the perspective of let's try and disrupt ourselves before we get disrupted by a startup that comes out of the wild. Some corporates come up with venture building and venturing as part of a broader digital growth strategy. For some corporates, they are looking for ways to get closer to their end customers. You can imagine a corporate, I'm talking not in the insurance sector, but in maybe manufacturing. You're quite high up in the value chain, quite far away from the end user who uses your products. And so you have no direct feedback or no direct connection to that end user. But through digital venturing, you can create opportunities to engage directly with that end user in a way that you can learn about how they use your products. And that input can feed your own product innovation, right? So they come at it from different perspectives. And another emerging trend we're seeing is topics like climate and sustainability, right? So this is now becoming an important topic for many sectors. It's moving at different speeds in different sectors, but for many it's quite a priority. And a lot of the solutions that we need will come from improving internal processes, from fixing current ways of working. But we also believe a lot of it will come through innovation, through coming up with new ideas, new technologies, new solutions. And it is incumbent on corporates to also be part of that innovation. So for us, we engage with corporates on a number of these topics. There are a number of reasons why corporate venturing makes sense. Some of them choose to do CVC, and that's the right choice for them. But in many other cases, building your own from scratch does make sense. It isn't an easy journey. I mean, you've been through it. You've probably seen it as well. But for a corporate to say we're going to build a venture that's effectively a startup from scratch is a daunting journey. It requires capabilities. It requires mindset change. It requires, of course, talent. But this is the journey that we're happy to take our corporate partners on.
No, great. I'm going to throw a little bit of a curveball over here, right? Since you touch upon the topic of sustainability and ESG, right? Coming from the bank, right? Is that something that the guys up top are asking you to put more focus and to think a little bit more in the areas of environment, sustainability, and governance? No?
Yeah, absolutely. It's actually one of our 6 high conviction themes. So in the course of 4 years, we've invested in 20. We've just made our 21 portfolio investment, and we've launched 30 plus ventures from the ground up. And the way that we segment them is we segment them according to themes, high conviction themes, and one of the high conviction themes is ESG. Obviously, there needs to be a financial aspect out of it, because I think what a lot of corporates do is when they start venture building, they start with an approach of trying it out. We have a very different approach. We treat it as a business, and every venture that we either invest in or that we decide to build has to have all VC metrics. So potential for IRR with an exit and all these things. So what the previous panel was actually talking about are absolutely incorporated in the way we think. So ESG, yes, but ESG with a financial outcome and financial inputs.
So investability is one of those matrices that I guess all of us will look into when we launch or start a startup, right? Kristian, I see you having an interest in trying to.
Well, no. I'm actually totally different, right? We're an independent studio. We pick founders based on whether we like them. We think they have a cool idea. To be honest, the pitch, it never ends up being the thing we build at the end. So to me, it's much more about, is this the right person we want to go through this with for the next 2 or 3 years? Do they know things? Have they worked in the industry? Do they know what they're trying to change? That's what we obviously we're coming at it from a completely different angle.
I would just say it's not a different angle. It's the same angle as we look at the team as one of the core foundations of a successful venture. So the team needs to have the right set of expertise, the right entrepreneur mindset in order to be successful, but not only.
So how would BCG look at these?
Yeah, I mean, again, team is fundamental. People is fundamental. It's easy to focus on the technology and the product because you can get that into the market and MVP in 6 months. That's great. But for the venture to succeed over a 5-year horizon, it's the team that takes it there, right? And it's the conviction of the team that can get you there, the persistence and the willingness to go at it. Which is why, again, in the context of corporates, it's important that you incentivize a corporate-owned venture and the team in the right way. Having said that, though, how we come at it, we also place a lot of emphasis on unlocking corporate assets. So when we talk to corporates, we try to see what assets they might have within their group or portfolio that they can inject into this venture that can turbocharge the venture. And these assets can be physical assets like distribution channels, physical touch points with customers. They can be digital assets like a billing relationship that you already have from a product or service, or customer data, or they can be intangibles like intellectual property, right? Patents that you have sitting around that you haven't found a way to commercialize, and we can help you do that too. But that is the starting point, right? That's what seeds the ideation process. This is how we say, this venture makes sense for you to incubate and build, but then it comes back again to having the right team in place to see it through. So we do come at it at maybe a problem-first approach. So what is the problem we're trying to solve, and how, and why are you the right corporate to take that on? And then we quickly bring in okay, let's now think about the team that can do it. And because we are kind of full service, we build the ventures ourselves. we can get it off the ground, and in that process also build up the team that will sustain it over, let's say, a 5-year period or even longer.
Okay, great. So we touched upon investability, we touched upon teams, we touched upon ideas, but still very often you hear, right, horror stories about ventures being started or being spin out from a corporate venture building kind of environment, but couldn't quite make it past the early stage, right, of getting in external investor, and many of them do sort of frame it around structures, right? The corporate structure of the basic setup or the fundamental setup. So in your respective views, how would you see and how would you think the corporate structuring as early on as during venturing when you found the ventures, right? How important is it to set off with the right structure? Anyone would take it? Let's have it open. Yeah, Kristian.
There was definitely a tendency to create these innovation labs or garages or whatever they were called, and not necessarily connect them well with the rest of the organization. So it was a sort of pet project where they didn't actually give enough authority to the people that were running these labs. So what happened was a lot of MVPs, POCs, and so on were created, but not many of them were actually turned into real businesses and real businesses that were serving real needs within the organization, because the people with the budgets had completely different objectives than the people that were running these labs. So I think what we're seeing now, which is good, is more connection between the overall strategy of the corporate and why they have this lab and what they're doing inside of the lab. And I think that's what we need to see, because otherwise you would build hundreds of POCs. And actually the worst thing that can happen to a startup is that they think they're going to do this deal with the corporate, and then they don't, and then they're dead. So actually a lot of startups ended up dying because of that relationship rather than succeeding. That is changing to some extent, and that's a great thing.
Yeah, I would echo what was said. I think it needs to be more than a pet project, to what you were just saying. Building a CVC and a venture building activity inside a big corporate takes more than just putting a pinball machine and a few ping pong tables. It takes real commitment and with a strategy that needs to be at the highest level. So you need to have the commitment from the CEO, from your board, that this is actually a real transformation strategy for the company and not just a fun, nice to have activity.
Yeah, great. Yeah, I can add on this. I mean, completely agree. This is fundamental. Having support from the very top is fundamental. The venture builder, the studio, whatever we call it, and the ventures it creates, it's going to function differently from the rest of the corporate. It's going to move at a different speed. It's going to have a different cadence. It's going to have a different risk profile, right? What we often find is with corporates who are used to investing in large capex projects, building a plant, building a factory, it's very predictable. You make this big investment, and then the returns are very predictable. With a venture, with a digital startup, that's absolutely not the case. And so the reason why the senior leadership involvement is necessary is they need to understand you're entering into a different type of endeavor. And so it's important to empower the venture builder with the right level of decision making to take those risks, to try different things. If it's not working, fail fast and move on to the next thing. Get to market quickly, even before it's done. All the things that any entrepreneur will do and feels very normal in the normal entrepreneurship VC language can feel quite alien in a corporate context. And so it's important that the venture builder and the studios are set up with that understanding, and that requires backing from the very top, but then also be prepared to see things moving in a different way and in a different speed compared to what you might be otherwise used to.
Yeah, and I hear mindset change, mandates, big boss at the top, giving the instructions or the firepower behind, right? But you touch upon this very one interesting topic, right? Risk. And lots of corporates don't like this word, right? When you talk about risk, they go, ooh, how do I avoid, mitigate? It's all about mitigation, right? And how do we help change that perception, right? That this is a risky venture into a perception of perhaps let's just take small bets, right? It's a small controlled bets, right? And then how in your experience have you managed to convince your stakeholders, right, in getting into this realm of this is a risky venture into, okay, let me experiment, like you say, try fast, fail fast, right? Shyam, perhaps starting from you.
Yeah. I mean, I think there's different approaches a corporate can take when you try to rationalize taking on the risk, right? I talked about corporate assets. That is a big factor that de-risks the venture, let's say, compared to a venture that's not backed by a corporate or not built by a corporate, right? I mean, really, you need the corporate to inject those assets, make those assets available to the venture to be used, and that actually de-risks it quite a bit. It can de-risk the product, it can de-risk the go-to-market strategy, it can de-risk various things. The other approach, of course, is to do what a VC does, which is to have a portfolio, right? So don't bet on one thing, bet on a portfolio and look for complementarities amongst that portfolio of ventures. I mean, I'm sure you guys do this as well. And so again, not think of it as one project. It is exploration, it is trying different things, but it's trying things with a concrete strategy linked to what you're trying to achieve as an overall corporate, right? What is the overall corporate objective of doing venturing? Is it exit? Is it strengthening your current business? Whatever it is. But look at portfolios as a way to balance a little bit that risk and then help the ventures you create help each other to some extent.
And so how does Vesuvio do it, right?
Well, it depends. I mean, we do work with a large insurance group at the moment, and the way we got to work with them was they bought some companies that we worked for. And then we had the meeting, and they were, when we said, well, we're already doing it. You just didn't know. And the other thing you didn't know is you bought these two companies, and they're integrated, and we did it. So sometimes they sort of have to wake up to it. We like to say to them, okay, you have a problem in your IT department. You have an enormous budget in your IT department. And you spend it on, fixing your systems or upgrading your systems. You may consider looking at the opportunity for that to be a profit center rather than pure cost. I think there's a certain amount of excitement within an IT department that is used to presenting them just being a cost, to turning into something that is actually part of the, the profit entity within a profit center within a business, and they can be part of actually the value creation for the future. So I think it starts with these kinds of conversations about what you're going to invest in this anyway. Should it just stay within your back office, or should we perhaps look at whether that could be a product that we can sell to the world? So that's one way. The other way is clearly when it's entrepreneurs first. Someone has a great idea, we start working on it, we go and show it to them, we tell them how it can potentially help improve their business. And then we find the one or two corporates that perhaps are willing to go a little bit on that journey, to take a little bit of a risk. So it can be both ways. It can be present them with a sort of prototype, or go and have the conversation about why looking at this as a pure consulting project.
And Harald, could you share some of your experience then?
So I would say a few things about risk. So first of all, we're a bank. So we mitigate risk on a daily basis. We have a whole department around risk. But so risk could be many things. It could be financial risk. It could be, in our case, reputational risk. It could be data privacy risk. So there's a number of risks that we need to identify, and we need to mitigate and decide whether or not it's something that is a show blocker, or that we can that we can decide to investigate. The other part of de-risking is working in a lean way. working and investing in a lean way with reporting. So we also work with what we call OKRs, which are setting up the objectives, key results. So making sure that companies we invest in, companies that we build are on track, and I would say build lean, invest lean, and keep on tracking on these objectives.
Of course, you are blessed by with having a CVC, backing you, a fund backing you, right? I think in Vesuvio's and even in Shyam's case, do you have a fund that's continuously backing and supporting you in the various stage gates?
Yeah, I mean, in our case, so the Boston Consulting Group does have a fund as well, B Capital Group, but it's quite distinct from Digital Ventures, right? So Digital Ventures' mission is to invent, build, and scale ventures and new digital businesses, partnering with corporates. So usually it's the corporate financing that's powering the venture, and then over time you can raise and bring other investors on board. And DV, we can take a small equity stake in there as well. But it's typically the corporate that's the founder, right? That's financing the venture.
So from the shareholders fund.
From the shareholders fund in the beginning, yes.
Okay. And would you see that convenience as something that you would love to have?
We would love to have a fund. So hook me up. So what we did was a little bit different, or very different, because initially we worked for corporates for money, and we took some of that money and invested in the startups. So that's kind of how we started, actually. So we ran a very weird VC, a cashless VC almost, where we earned some money to survive over here, and we used that to invest in startups, invest technology and time in startups. Now, both are great, because startups are willing to take more risk, try more things, do some little bit cooler things. Where the corporates have money, you need both, right? So over time it gets a bit more mature, and you might be able to take some of those great ideas and bring them back into the corporates. That's done us pretty well, but in terms of really scaling it, yes, we need more capital.
Yeah, even in the research and whatever that I've looked up, you're starting to see the emergence of a hybrid model, right? A hybrid CVC or hybrid CVB, right? Coupling the build, with the invest, because the invest side will always like to know what you're building, and therefore doubling down. And the build side, like where Kristian is, we're always like, can you give me more money? No, because I need to build the cool stuff. Are you observing those kinds of trends in your respective regions, right? I think we all know it from UK, in the Middle East and in Asia, right? Yours a bit more diverse, of course. Do you see that trend, happening, in your respective regions?
So I think it depends on the themes. It depends as well on the regions. So we invest globally, and we build ventures globally, as long as it's within the footprint of our bank. We're careful in the way that we invest and in the way that we build. So we won't necessarily put a huge ticket initially. We want to test, and based on how well our initial decision is being made through the periods of incubation, through the periods of initial stages and so forth, and we'll put a bigger stake into it.
Thank you. And over in your part of the world, do you see that emerging, or it's still a very rare trend to see hybrid models?
Hybrid models.
Hybrid venture. So the venture builder does come with an investment so-called capability, something that you're trying.
No, that is what a venture builder is in theory, right? So we're in a way only half of a venture builder, right? We are, in my opinion, you need to do a very good job, you need to have a venture studio, a capability to help these ventures from an execution point of view. So that's what we do a lot of. And then you need some money to invest in doing that and in growing the business. So in a way, we are sort of half of a venture builder. There's a lot of VCs out there that have rebranded themselves venture builders. They are effectively that other half, and hopefully we can come together and deliver strong results as a collective.
So Shyam, any near-term goal in setting up a fund for yourself?
No, but let me give the MENA view, or at least my view on the region on this trend. I think it's still early days in MENA, at least amongst large corporates on the whole corporate venturing topic. It's definitely gaining a lot of attention. It's gaining momentum, but I think corporates are still slowly figuring out how to organize themselves to take advantage of this. Whether it's setting up a fund, whether it's setting up a venture builder, whether it's both, how close to each other should they be under the same umbrella, whatever it is, right? So I think it's still early days, but I think the understanding will come quicker than we think. I think corporates here will wrap their heads around the advantages, the challenges, but the benefits of doing all of this a bit quicker than we think. And I think that will then help power more entrepreneurship, more innovation, more unicorns from the region, right? Which, I mean, we've noted throughout the day. There's more ahead of us than behind us on that journey, and we think corporates have a big role to play in that. But as I said in the beginning, it is a challenging and daunting journey for a corporate to suddenly wake up one morning and say, we're going to do venturing of whatever kind, investing or building. But it is a rewarding journey, and if you're convinced that's the right journey, then set it up in the right way, put the right resources behind it, put the right team behind it, and the rewards will be there at the end of it.
I think just back to what Shyam was saying at the beginning, the big advantage that corporates can bring to the table is their existing connections with the market, with the customers, their physical assets, their relationship. In our case, for example, the relationships we have with regulators, or connections with other potential investors or other potential corporates, and it's all of that we can bring to the startup ecosystem.
And that's even more true in insurance, right? Because you need an insurance product. You need capacity from somewhere. You need regulation. You need some sort of access to a customer base. There's a lot of things that you need. You might not be able to do all of the activities yourself initially, so you need a claims partner. You need, all sorts of things. And if the corporate is willing to open up its, inventory and allow you to kind of focus on the one thing that you want to do a lot better, it's really what you need as an InsurTech startup. And it's also, I believe, what the corporate need, right? Because they need some people that are out there trying really hard to take that piece and making it really great. And that's not something that usually a corporate would do. They would sort of be more incremental in their innovation, let's say, small iterations, where this gives an opportunity for both sides to actually take much bigger steps.
Well, so hopefully QIC, DVP can lead the way and be that shining beacon in this region. But before we close, I'd like to open up to the floor. Are there any questions that anyone would like to ask to the panel audience, panel speakers over here? You're going to ask, Othman? Yes.
Thank you. Look, you've touched base on this question and this topic that we always, talk about. In venture building, in corporation, do you start by building the business and find a CEO or a manager to manage that business, or do you start by finding a founder with the right mindset and build it on the go, right?
Yeah, I think in our case, so we're similar. We were a big corporation. In our case, we start with a founder. The founder has the idea. has the expertise because he knows the business. He understands very well the whole ecosystem. But he's never done it. He or she has never done it before. They've never had an entrepreneur experience. So at some point, you will need to find a co-founder, potentially a CEO, and pair that externality to the initial founder.
Shyam, in your experience?
I mean, I think our approach is much more problem first. And the reason we think that approach works well in the way we execute is we have a very rigorous methodology that we put behind it, right? So it's market research, validated market learning, rapid iterations, quickly building small incremental stuff that we test, and trying to get a sense of problem solution fit, product market fit, whatever, as early as possible, right? And so once we're convinced that the solution meets a real market need and there is a real gap that we've identified and the all-important corporate asset is there to turbocharge, that for us gives us the conviction that this is a venture that is worth building, can have legs and can sustain. But then, as I said, the team comes in really quickly. It's not to say, after the fact, we go find a bunch of people to run the venture. That's not how we do it. But let's say the incoming focus is to try and find an opportunity and then prove out as best as we can that opportunity in as lean a way as possible, and then bring in the team.
Kristian?
So far, it's been more founder first. So people would have come to us with great ideas. Typically, people from inside the industry, worked there for 10, 15 years, been very frustrated with something. They know exactly what they want to do to change that. They have no clue how to build a business. It's the perfect founder for us to work with. Now, when you hear this a lot, that the serial founder, the second, third time someone is founding a business, many investors would rather invest in someone like that. It doesn't matter if they failed the first 2 times because they learned a lot. Because starting from experience is very different from starting from scratch. So a venture studio is effectively serial entrepreneurship at scale. So now we are, of course, trying to match our capability. It makes no sense if we don't work with founders or problems that fit our capability, because then we won't leverage our experience to help them the best that we can. So it's sort of changing a bit, where initially it was like, you have a great idea, let's work on it. Now we have sort of found a shape, and so the ideas have to be inside of there for us to be as good as we can possibly be.
Thank you. So Othman's a tie, by the way.
Sorry?
No, he and I had this ongoing debate, how should it be like, so we want to use this opportunity to validate the assumptions that we had. But any more questions before we close? All right. And again, right, so before we close, right, just from each of you, right, if you were to give corporate advice to embark on this corporate innovation journey, right, starting from you, Kristian, what would be that one thing or 2 things that they should think about, and consider before embarking on this journey, right?
Well, 2 things.
3 things or 1.
Okay, let me give 2. One nice one, and
okay.
I would say it's important that when you commit, right? So what do I mean? I mean, if you have this lab, the person you put in charge of the lab, you give some money, and you make sure that they know they have to spend that money. You don't turn them into these kinds of, that have to look for budgets every, 5 minutes, try to, because that just is a corporate, right? You have to separate it out, give it its own budget, its own team, a lot of autonomy to do things differently. So that's first. The way to test whether you've done it is go and take a walk through it and look at the screens, and if it's full of spreadsheets, then it's not succeeded. If it's full of code, people doing stuff, then you have. So if you see all the spreadsheets, close it, because it's not doing anything.
Thank you. Shyam?
From my point of view, I would say 3 things to make sure you do when you set on the journey. Put the right team in place, whether it's the venture or even the builder around it. Put the right team in place who have that different mindset from the corporate, who will be entrepreneurial in themselves and don't kind of fall back to the corporate ways of working. The second thing is setting up the right environment around that team to give this venture builder room to do what it needs to do, which is going to be, again, different from business as usual. And then have a bit of a view on what is the midterm approach, the midterm methodology. You're going to see ventures come and go. You're going to see investments working out, not working out. Be prepared to be resilient through that. The first 1 or 2 things you build or invest in might not succeed, but take a bit of a mid to long-term view. Yeah, those would be the 3 things.
And last but not least, Harald.
I would say define what you mean by corporate innovation. Corporate innovation can mean so many different things. For us, it's new business models and how these new business models will have an impact for the corporates and ultimately bring alternative and optionality for the bank, and to the point that we're going to have a huge impact on the P&L.
Okay, thank you. No, thank you. No, Kristian, Shyam, Harald, no, thank you. All right. I'm going to do a little bit of a trick here. Before you all go down, why don't we take a selfie with the entire crowd behind us? Come, let's gather together. Right. Can we see everybody?
Sure. We go down there.
Yeah, we ready?
You stand up.
Okay, 1, 2, go. 2, go. All right.
Awesome.